Thank you so much for your time today. Very, very interesting times there when you look at the equities as well. You know, we've seen how things played out this week with that listing of GTCO. We'll get into all of that a bit, but let me just get a sense of how investors played in the market this week.
Hi, Kenneth. Thanks for having me. So, the participation of investors this week was quite low relative to previous week, relative to last week. Part of the reason is because there is no major catalyst to drive interest in the equity market. So, on one hand, we have the international investors or foreign investors are not yet so much into the market because the global economy essentially is yet to recover from the COVID effect. COVID effect, yes, and then the fundamentals of Nigeria's economy is not particularly attractive at this time because of we are just coming out of the recession, and then of course the challenges around foreign exchange is also not particularly attractive. And domestic investors that account for approximately 80% of portfolio investors in Nigeria, portfolio investments on the exchange right now, are struggling or battling liquidity challenges because of high inflationary environment, which of course, in an high inflationary environment, that affects disposable income and by implication, investable funds. So participation of investors this week was quite low. Low volume of number of trades, volume of transactions, and the likes.
All right, now speaking still hinging on inflation, which you rightly mentioned, there we saw the June figure printed out today, moderated a little further, but some would expect that slide to come out a bit steeper. But what do you think? What's your take on inflation and the likely impact we'll see going forward?
Inflation is right now we are still in that high inflationary environment, and so it's still increasing actually. It's just that the rate of increase has reduced or is relative to last month, and that's to May. Now, it's perhaps if we look at the 12-month moving average, maybe that could tell give a clearer picture, because that comes to about 15.93 compared to 15.5 in the previous month. So the inflation is actually on the upward trend, and it's yes, the rate of growth, the rate of increase has reduced, but it's still on the upward trend. 17.75% is high inflation rate anywhere in the world, likely driven by food inflation, which is 21.83% or so. So it's that's really the main driver of the high headline inflation, food aspects of the inflation. But generally speaking, it was a broad-based increase in prices. All the key items that make up the basket that makes the headline inflation, all of them increased. So it's a broad-based increase in inflation, as you see.
All right, well, let's look at some catalysts that could also spur the markets and get a better outlook from the markets. With the half-year earnings, a lot is hinging on that. Okay. But what are your expectations going forward, especially for the banks and the financial institutions?
I think typically it's not looking very bright because, like I mentioned, it's a high inflationary environment. Companies are really struggling in terms of high cost of operating environment and so on. So high cost of doing business, and so the prime customers of the banks are these companies. So once these companies are having challenges, it is going to reflect one way or the other in the books of the banks. Yes, the banks are diversifying. We have the likes of GTB that has gone to Holdco in order to take advantage of other opportunities in the financial institutions. We have, I think, Access and Sterling have also applied for Holdco. So those are the kind of things that the banks are focusing on to diversify their income base in order to cushion the effect of the broad-based weak environment in which the economy is right now.
All right, let's get into one of the earnings that we've seen play out this week. I'm talking about United Capital. We saw fees and commissions. They're driving that their earnings up by about almost 64%. What's your take on this stock and the likes of it?
This is a very strong result. Revenue, like you said, was driven by fees and commission income, and revenue grew about 54%. So this is a very strong result. Profit before tax also increased significantly. Profit margin, everything seemed to be going well for this company at this time. But not to keep in mind also that operating expense increased by 43%. Now that's understandable because of a high inflationary environment, but that is still high. That is still quite high, and on average, so that's a reflection of the kind of environment that many of the other companies, all the other companies, are operating in. So yes, for United Capital, this is a very, very good result. In terms of the other companies playing in that space, I expect good results from them as well. Maybe the likes of Stanbic IBTC, because they have the investment bank also included in the company, and so on, and maybe FCMB and co. So we expect positive results from these names, but overall, each company will have to be assessed on its own merit because of that will be determined by how they react to the high cost environment in which they are operating in.